Okay, well, welcome to everyone online or on the phone to Mortgage Monday, March 5th. And today I'll be going over the mortgage loan process. At the end, I will have a Q&A if you have any questions that come up during the process. Hopefully it's straightforward. It's um, it's very simple information. If you are new to this, it'll give you a great idea as to how the process works and what to anticipate during your escrow. So, the mortgage loan process. Step 1, contact a local loan officer. A local loan officer should know your market well. Loan officers from outside of the state may run into properties they're unfamiliar with and could be inexperienced with how or where to go to resolve issues that may arise during the loan process. For example, in a resort market like Hawaii, there are different classifications of condominiums, such as residential condominium, condo hotel, lodging units, fractional timeshares, and full-time shares. A local loan officer may know the programs available for each and help guide a borrower correctly from the start of the process instead of finding out in the middle that more down payment is needed, or the rate offered will be increased, or the loan is declined altogether because the property issues weren't discovered until much later. Step 2, the pre-qualification or pre-approval. The loan officer will interview the applicants for their financial condition. They ask questions regarding income, debts, and assets. At the interview, either a pre-qualification or a pre-approval of the applicant is done. The pre-qualification is a review of the applicant's information given to the loan officer verbally. There's no evidence provided. A pre-qualification letter can be issued to the applicant showing the amount the loan officer qualified them for. The letter distinctly discloses that no information has been verified. A pre-approval is also a review of the borrower's financial information given verbally, as well as a credit report is pulled. This is better than the pre-qualification because at least the debts and credit scores have been reviewed. However, it's still not an upfront guarantee of approval. A pre-approval letter can be issued to the applicant showing the amount pre-approved for, and the letter distinctly discloses that no financial information has been verified. And now there is a second version of a pre-approval, and this is the most dependable. It's the pre-approval review done by a loan underwriter. This is issued based on the borrower's documented financial information as well as a credit report, and often only leaves the borrower with loan conditions that have to do with the property that is yet to be found. This pre-approval can take up to 2 weeks to complete due to the requirement for an underwriter to issue it, but it will require less loan conditions to clear once the property is found, as most of the work is done up front. Each of these is not a commitment to lend until a full application is received, a property is in contract, and an underwriter has reviewed the application. The loan officer should always try to convince the applicant to pull their credit report and to provide financial documentation. Okay, step 3. Once the applicant has completed the application, by law, the lender has 3 days to respond to the applicant with the loan disclosure packet, which includes the extremely important loan estimate and intent to proceed documents. The loan estimate is the breakdown of rate, APR, fees, prepaids, and the monthly payment. Once issued, the fees on this document cannot increase unless there is a changed circumstance during the loan process. This circumstantial event, such as an appraisal value coming in lower than expected, or the borrower requests to increase the loan amount, will allow fees to be increased. The intent to proceed is the document the borrower signs to instruct the lender to move forward with the processing of their loan request. Only after the intent to proceed is received can the appraisal deposit be collected and the order placed. Step 4, processing. Once the intent to proceed is signed, the remaining financial documentation outstanding from the documents are collected. Depending on the applicant's complexity, the application may take a few days to be deemed complete. The appraisal is ordered and the file is submitted to the loan processor. The processor collects verification of employment, insurance coverages, credit report supplements, communicates with the escrow company, and gives updates to the lender so the agents and applicants can also be updated. Step 5, underwriting. The processor then submits the file to the underwriter for review for conditional loan decision. Once the file reaches the top of the underwriter's queue, it will typically take a few days to complete the review. Step 6, the conditional loan approval is given. The underwriter issues a conditional loan approval with a list of conditions the applicant must satisfy. The loan officer and the applicant work on submitting the remaining documentation to the processor. Then step 7 happens. The processor returns the file to the underwriter to clear the remaining outstanding conditions and issues a clear to close status. The file is then transferred to a loan closer. Now, by law, the closing disclosure document must go out to the borrowers for signature before an appointment for the closing at the escrow company can be set. This document is like the upfront loan estimate, and it contains the final rate, APR, fees, and monthly payment. It must be signed no less than 3 days before the targeted closing date. A closing date can't be set until the closing disclosure is signed. And step 9, the closing. And this is the meeting where buyers sign all the escrow and loan documents. The location is typically in the office of the escrow company, or if buyers are out of state, the escrow company will hire a mobile notary to go to their home where they will sign the documents. After originals are returned, the funds from the lender are transferred to the escrow company. And lastly, step 10, the recording. The escrow company records the legal documents for the purchase with the Bureau of Conveyances here in Hawaii. So that brings the presentation on the mortgage loan process to an end. And if you have any questions that came up, I'd like to open it up to Q&A if you have on the phone or online. Let me know. Now's the time. Okay, any questions out there? I know it's very streamlined stuff, easy stuff. Okay, well, if you do have any questions after, please email me. Of course, you can contact me, email me, text me whenever you have any questions regarding financing. And I appreciate your time. Thank you for calling in today. I'll give you back about another 10 minutes of your day. And I'll see you next Mortgage Monday. Aloha, everyone. Oh, I got a chat here. Oh, right on. Thanks, Peg. Have a good day.